Hello everybody, this side Siddharth. In this video, I will show you how do I gauge relative strength in the stocks, especially when the markets are tanking down. I have marked this line. Actually, this represents the top made by the benchmark index on 8th of February. Now, this is my point of reference. After this, after 8th of Feb, what has been the activity of the stock is most relevant to me. This is the benchmark index, which is mid cap and small cap 400. And I will use this part of the chart to screen my stocks. So as you can see, after 8th of Feb, in this move, the markets came down for 3 to 4 days, and so did the stock. But the stock actually took the support from 20 moving average, and when the index gave a small pullback, the stock made a new high. Now, this is really important to see is when the index is giving small pullback, the stock is actually making new high, which shows the inherent strength of the stock. This shows that the buyers are really active in this counter and they really want to push the price on the upside. Now, likewise, if you see here again, the markets fell for 3 to 4 days. The stock pulled back to 50-day average, and again, after some days, it made a new high. Whereas the markets have been making new subsequent lows. The stock is more of in a sideways range, and in the sideways range, it is continuously making highs. It is breaching its high of 8th Feb and subsequently making new highs. In the next example, this is the stock of Jyoti CNC. You can see that on 8th of Feb, it was actually in a tight range. Then again, it actually gave a shakeout and made a new high. And in the meanwhile, the index was making new lows, but the stock is in a sideways range. So these are the counters that would actually outperform the index when the index would bottom out and we would see some buying happening in the index. Now in Geo Finance, if you can see, when the market made its top, it was actually in a range. While the index made its new lows, the stock was making its new highs. So you can see that there is clearly a divergence in the price. And in the down days, you would see there is not much volume activity, which shows that when the markets would bottom out, these are the counters where fresh money would kick in the most. And these are probably the next leaders of the market. Now, uh, a, this is a little different case because you could see that when the markets fell for 4 to 5 days in last week, this counter also fell. It breached its 50 MA, and in just 2 days, it went back to its highs. And you can see a significant amount of volume activity on the upside. This shows that this was a perfect shakeout, and the market makers actually used this fall to accumulate a huge chunk of this stock. So, in these kind of counters, what you could do is if you see any tight range on the right side, you just have to wait for a low risk entry, after which you can buy the breakout. Similarly, Cochin Shipyard, in just 2 days, it went back to its highs, showing that there is a keen buy interest among the investors who actually found the stock way cheaper in a jittery environment of the market. Similarly, in RICO Industries, here the stock actually took support from 20 moving average and then a strong bounce and back to its highs. So this was all. You just need to figure out that what would be your point of reference, and from that point of reference you have to see the activity of the stock vis-a-vis the activity of the index. If the index is falling subsequently, you need to see that whether the stock is moving in a sideways range, or if it's for if even if it is falling, whether there is subsequent volume activity or not. Now, in an outperformer, on the down days, there won't be any volume activity, but on the upside days, there would be significant volume participation. So that is all. I hope that my explanation was really simple for you. If you found this video useful, uh, do share it with your friends and get smarter and a better investor. Thank you.